Well, welcome Investorholics, friends and casual viewers. This is another ETF Spotlight review, and today we'll be taking a look at IHHY, which is the iShares Global High Yield Bond, and this one is hedged to the Australian dollar. So fixed income gives you the opportunity to earn attractive regular income from a portfolio of investments that include liquid high yield corporate bonds issued by corporations in developed markets. So if you're looking for income, or you're thinking about options to generate income from your portfolio, this might be one to hang around and take a look at. Well, hello there Investorholics, this is Scott. KrackTheSky Value Investing will be giving you up-to-date investing news and content so you can navigate the markets wherever you are. My mission is to give you the knowledge and confidence to take control of your own personal finances, expand your investment horizons, and crack your financial sky. Okay, so the fund aims to provide investors with the performance of the index that tracks fixed rate, high yield corporate bonds across global developed markets. Investment strategy, so the fund seeks to achieve the objective by tracking the performance of the market iBox Global Developed Markets Liquid High Yield Capped Index, and that's a mouthful. So we have a look at the Y factor. Why on earth would we bother? So simple exposure to high yield corporate bonds across global markets and sectors in a single fund. Another reason why we can use this one is we can diversify our portfolio and seek potentially higher levels of income with the bank deposits. Return on your deposit, your interest is actually quite low at the moment, so we can use these type of products to gain a little bit higher return from our invested capital. With this ETF you can gain international exposure while trying to minimize the impact of the Australian dollar volatility in your returns because it's hedged. Okay, so it had a net asset value of $99.30, trading just below that at 99.10 cents. So if you're looking at that, that might actually be time to buy when the net asset value is when it's trading at below the net asset value, I should say. So it's trading at a bit of a discount, so it might be time to look at it. Market cap was $68,600,000, $68 million in round figures. Management fee is a little high, but not too bad, at 0.56%. Distribution frequency, you get paid 3 times a year, April, July, October. Dividend yields, not too bad, much better than bank, as we kind of mentioned before, roughly 5.63%. So this ETF could be used by an investor that is seeking exposure to a diversified portfolio of international corporate fixed interest securities. If you're looking to build a balanced portfolio, this ETF could be very useful as a cornerstone investment. So long-term investing is all about building a portfolio that includes different types of assets that aren't related. So if one asset happens to fall in value, the other assets, because they're not related, different markets or different commodities or whatever it happens to be, you should minimize the volatility in your portfolio, and sort of looking at reducing investment risk anyway. So if you're interested in these sort of products, we always should be looking at additional options, because we don't just want to look at one investment. So also have a look at BNDS, CRED, IGB or RGB. There's a lot of different types of products on the market, so it's definitely worth doing your research if you're interested in using these bond type instruments. As I was saying, it's an opportunity to earn attractive regular income. This one you get paid every 3 months roughly, you know, and so the underlying portfolio looks pretty good. So we can have a look here at the graph. Obviously we've got the obligatory coronavirus crash, and she's come back up. So you're still looking at sort of a discount of about $9 to $10 on the pre-crash price to where it is now. So it's not too bad. So you can kind of get some decent return, I suppose, or you know, it's a little bit cheaper than what it was 6 months ago, and that quite possibly is a reflection on the broader international economy as well. You can have a look here, the underlying securities. So there's a fair bit held in cash. Then you got Sprint. They've got some bonds out. Centene Corporation, Ford Motor Company, Teva Pharmaceuticals, Tenet Healthcare Corporation, Sprint, Teva Corporation. But I mean, there's actually quite a lot of bonds held in this portfolio, so it's quite diversified. So IHH is a great, relatively low cost way to gain exposure to a higher quality ETF. Produces consistent income, gives you asset diversification, and reduces overall portfolio volatility. Well, that's the plan anyway. Yeah, so looking at a pretty diversified portfolio that sort of covers really bigger sort of companies that are going to be offering bonds on the international marketplace. So you're looking at sort of a total underlying holdings of about over 1,700 bonds actually inside this ETF, so it's quite diversified. So your returns are pretty well guaranteed over the short to medium term anyway. Anyway, as always, make sure you guys are doing your additional research. These are only ever a quick look over, just some basic information just to give you a bit of a primer to get started on your own research. Are you interested in learning more about personal finance and investing in the markets? If you are, then smash the like here on the left hand side and caress the subscribe button on the right hand side. It's Crack the Sky Value Investing. We'll be giving you up-to-date investing news and content so you can navigate the markets wherever you are. Expand your investment horizon and crack your financial sky. Thanks guys. See you later.